Oh boy, that's horrible.
All right, well, welcome into the XBE Thrive series. This is our service line micro for financial services. And want to tell you a little bit about the Diversity Consortium. First off, my name is Raymond Tate. I'm the Vice President of Sales for the Diversity Consortium, and it's my pleasure to be able to go over the information, really to be able to introduce our guest speaker that's on the line right now and talk a little about the financial services, but I'll get into that in a minute. Let me tell you a little bit about the mission of the Diversity Consortium. The mission very specifically is to make a true measurable difference in the supplier diversity landscape while providing a return on investment for corporations and XBE organizations. And what does that mean? A lot of it is so that they can make sure that they improve the communities in which they operate. And this is something that is really the guiding principle of what the Diversity Consortium does. And look at the way that it is now with the equity and inclusion issues of our times. This is so important in terms of being able to really enhance what the market looks like, not only on the corporate side, but of course, more importantly on the XBEs. One of the other things that I want to talk about before we begin is the definition of an XBE. So normally what you see is a disadvantaged business or a DBE in these particular situations, but we are working with the term called the XBE, and really what that does is that allows for total inclusion of minority businesses. So when you start talking about the LGBTQ, some of the other areas that aren't clearly defined under the disabled definition, XBE encompasses that. So you're going to see the XBE term, and hopefully that's acceptable to you, and we'll be working with that as we go through our presentation today. A little bit about our organization is that we have 25 plus service partners, and really what they are they're the top of the line, the cream of the crop, as it were, to be able to really assess XBEs, to be able to work into our service lines, and I'll talk a little bit about that in a minute. But the idea is that when we start talking about improving and proliferating your business as an XBE, our corporate partners, our partners that we have here are the subject matter experts in the lines of business that we use to be able to get there. There's 300 plus years diversity experience. When you start talking about what's the average between them, it's 10 plus years in the business. So strong partners that we have here, over 500 plus service lines, and I'll talk about that. As I said, again, it'll make a little bit more sense in a little bit, but usually if there's a way of assessing your business and being able to see, okay, you know what, maybe that's an area of improvement that we can talk about. That's really what the service line concept goes into it. Our partners have worked with thousands of XBEs and in terms of certifying them as well. So as we get a little bit further into it, and as we start to get into those important conversations of certification, does it make sense for me, and really what's the next steps, that's a big part of it in terms of what's going on. Hundreds of staff members. You have a workforce that's out there that's absolutely trying to make a change in the diversity area. And so with our particular partners, there are hundreds of people that are dedicated to this specific endeavor. When you also start talking about 100 million in revenue, and also $1 billion in cash reserves, really what this conversation talks about is the funding piece. So we'll flesh that out a little bit earlier. And as I said, 25 plus partners, and that will ever be growing in terms of people that can see the vision and are really looking at changing what the marketplace is and really proliferating the XBEs that we work with going forward. I talked a little bit about this before, and this is what we call our diversity service line. So if you start to look at the left side, this is really more towards the corporate offering. So one of the things that we do with the Diversity Consortium is really be able to give almost educate the market, and this is on the XBE side and us on the corporate side. But when you start talking about it from the corporate side, there could be technology, there could be visualization, research, program management, those types of things. And we work with our corporate partners on that side to really be able to get a good understanding of what the XBE offerings are, how to be able to get to them, and what's the best way to be able to work their business. So that's what you see on the left side and what we call the upmarket offerings. As you start to get to the right, this is what we call the down market offerings, and this is really what the XBEs that we work with. Here's the areas for in your business for which we work to. So when you start looking at the different areas, we talk about training, technology platforms, shared service, business development, and of course what we're going to talk about today, which is working capital. These are all areas as we go through the process and we assess your business. We say, okay, what areas can we help to proliferate to be able to make this business more appealing towards those corporate clients, and of course those RFPs and contracts as we start to get to. So as you start to look at it, on the left, there's your commercial, and on the right, that's for the XBE. So really excited about kind of fleshing that out with you if that's where you look to go in the future. Let's talk about our partners that are really sponsoring this particular area, and they all do a great job. And I want to make sure that I take a little time to be able to recognize them at this point. So we have LSQ, we have the Small Business Administration, Liquid Capital for financial success, of course, American Express, Hilton, NIH, Highmark Capital, Kickstarter, and Optus Bank. These are all folks that contribute to what we do in terms of the process, and you'll be able to see a little bit later on how we bring that over to the financial side, but really excited about our partners and what they do for us as we start to go through. All right, so let me talk about our guest today, Miss Tasha Harvey. She is a rock star in terms of being able to come in and talk about financial services, and she's the business development manager at Fundex Solution Group. Tasha brings a wealth of knowledge and experience to the table, and really excited about working with the XBEs and finding a way, as I said before, to be able to proliferate our business. Unfortunately, Von Zell Pittman could not be with us today, but like I said, he will be working with XBE, so I wanted to make sure that he's also recognized as we start to go through the process and we go through this particular webinar. So let's talk about what it is defining our audience, and then I'll also transition into the agenda for today. So some of the things that we're going to cover, why do minority businesses struggle to obtain traditional financing? I bet people's ears are starting to perk up as we go through it, and really Tasha is going to kind of walk us through and give us kind of a snapshot of where we are today and really what we're looking at doing in the future. Next, we're going to talk about an overview of the current data surrounding minority-owned businesses and access to finance. We're also going to talk about, we're going to introduce the cash conversion cycle and how businesses should try to manage working capital, explore the working capital solutions available to suppliers, and of course, last, hear from our experts, being Tasha in this case, on what steps are being taken to ensure a level playing field for minority-owned businesses. Having said that, I'm going to turn it over to Tasha to be able to go through the main types of capital and give her level of insight. So Tasha, the floor is yours.
Good afternoon. Thank you so much, Ray, for that awesome intro. Rockstar, I'm still trying every day. I try to outdo the day before. So I am excited to be here to talk about finance and funding options for small businesses. It's quite a passion of mine to work with small businesses and helping them engage and grow. When it comes to capital, there are so many types of capital sources that are out there. You'll hear terms like working capital, debt, equity, and in some cases you'll hear about trading capital. These are terms that you typically see on a balance sheet, and it just lists or it shows the available cash that a business has to use. Next slide, Ray. So in relation to the types of structures, so when you figure you need funding, you have to be careful about your ask. You need to understand what you need the money for, because that's going to dictate what type of loan you need. So there's business term loans, which are those that have an end date and a start date and an end date. You receive a lump sum up front, you pay it back with interest for the term of that loan. Then there's line of credits, where you obtain the sum of money that you need, but as you pay that down, you still have the available line of credit available that you have not used. So that's really, really effective for some businesses depending upon their structure. Then there's the cash flow loans, and those are loans that are really depicted based on your cash flow, your invoicing, and things of that nature. And so we'll talk a little bit more about that this afternoon. I don't think, Ray, I think you're muted.
So, of course, I was dropping heavy knowledge in that time frame. I was dropping gold in that, but hey, it is what it is. What I was going to ask you is some of the specific ones, like looking at line of credit. In educating the market, these are things that XBEs definitely want to know about, because everybody thinks, okay, you know what, I get money, I pay it back, and that's it. Can you talk a little bit before we transition off into really kind of how line of credit can help a business in terms of being able to.
Yeah. Again, you really have to be honed in on the specific use that you have for the fund. So if you've got a long-term need, like you're buying equipment or something that needs to be financed over a longer period, then we're going to look to those term loans. But if you have a short-term need, that's where your line of credit is going to be necessary. So it could be very helpful in the case that you've got vendors or suppliers, you've got customers that are paying you, net 30, net 60, that sort of thing, and you need something to just kind of carry you over for a temporary amount of time. That's where the line of credit is helpful. And so you can use it as needed. And so that's why I like to suggest, let's hone in on what you need it for, and let's figure out what's going to be the right answer for you.
And part of that evaluation process of what you need, I mean, that's not something that you just get by filling out an application. It's really having that conversation, seeing what the state of your business is and really where you want it to go. Am I correct?
Exactly. Because I say that, we're not just dealing with the situation at hand. We want to think forward. We want to think about what your future needs might be. And perhaps you may have a short-term need, but then there's particularly a long-term need that will come across the line, in a short amount of time, and maybe that business term loan can be sufficient to satisfy both. So it's not just about where you are, what your immediate need is, but it's important to understand what your long-term goals are as well, so that perhaps you might be able to do something all-inclusive.
Very good, very good. All right, let us go to the next one. Why do minority-owned businesses struggle to obtain business financing? And of course, this is the part where the gold comes in, and we're going to need to have everybody write this one down, because this is really robust conversation can come from that. So, Tasha, floor is yours.
Yeah, so there's so many reasons why businesses struggle to get financing, and in the bullet points here, there are some of the main reasons: lack of assets and collateral, business not located in an optimal location, poor or little credit history. That's a big one. Financing discrimination. Hey, it exists, right? And we have to be aware of it. But we'll talk a little bit more about how to position yourself to where that potentially, may not impact you as much, but it does happen. Lack of confidence that they will be approved. I see this all the time. Customers just don't think, or borrowers or businesses just don't think they'll be able to, get approved. They think that my business has not been around long enough. I hear that every day. There's loans out there. SBA can help you in a startup fashion. You don't even have to have an operating business. You just have to have a great plan and the will to make it happen. So, there's lack of confidence. I think it hones in a lot in reasons why some businesses struggle.
Let me ask you one of the bullet points that are on there: poor or little credit history. Obviously, this is a big one. Does this get into the personal side, business side? Kind of talk a little bit.
Yeah, I'm glad you brought that up. So there's this big misnomer that you can build business credit and have bad personal credit. And so I want to talk about that. Your personal credit is ever so important. It's often most likely going to be your ticket to the party, right? You have to have good personal credit in order for them to even consider analyzing your business and your business's capacities. So, I invite all of the businesses that I work with to have an idea of what your credit looks like. This is where you have to invest in yourself. You have to know what your credit it is and keep a handle on it. So I definitely recommend those credit companies or credit monitoring systems that you're able to take a look and keep a handle on your credit, because that's the first and sure way to get yourself in a position where you might be denied if that credit is not in line.
Very good, very good. We talked about it. The Federal Reserve found that in 1 in 4 Black-owned firms reported foregoing applying for credit. 60% felt they would be turned down if they applied. So, what does that come into? Are you prepared? What have you done? And I think you hit a really good term in terms of saying investing in yourself. getting your personal credit, kind of sacrificing some of those, immediate impulsive, buys to make sure that you're doing great credit on that. So great point. And like I said, I appreciate you expounding on that. All right, let's go into minority-owned business talks. If you want to go ahead and take it from here.
Sure. So these are just some statistics that we found here. Black small business owners are most likely to have used personal funds or bootstrap their business. Minority owners are actually less satisfied with their primary financial service provider. I think that plays hand in hand with, the trust factors that a lot of Black businesses or minority-owned businesses have with financial institutions, and then that thus impacts their, desire or confidence in applying for loans. 34% of Black-owned firms that didn't apply for emergency financing felt discouraged to do so. My firm was directly involved with PPP and all of the disaster types of loans that were out there, and you'd be surprised at how many firms qualified for the assistance but didn't do so. They did not, I've been helping folks here in this late hour, to try to get in before the deadline for the EIDL, the EIDL loan, by the end of the year. It was a great, and it is a great way to help, boost your business. And the key thing with those emergency financing vehicles is that you use them wisely. Some of the other things here, Black-owned firms are 1/2 as likely as white-owned firms to be fully approved for credit. Black-owned firms were 1/2 as likely as white-owned firms to receive all the PPP funding that they sought. So there you have it. We just, either we weren't prepared when we did apply for it, and that I see that a lot. There were certain documents that you had to have in place, and we'll talk about those later this afternoon, because it's all about being prepared for funding before you even need it. That makes the process go smooth, fast, and with less heartache.
You hit on one thing, and we see this quite often, is asking for the credit not just when you need it, when it's the last hour, right? We talk about the different, economic conditions and everything else that, came out of the pandemic and that kind of stuff. And, you saw that, you needed that money now to be able to keep your business afloat when you were probably in a better situation before. Do you see that often as you're starting to go through the process?
Yes, very often. Very often. I say, like I said, prepare before you need it. And the preparation is really along the lines of things that business owners should be doing anyway, right? It's not just about preparing for financing, it's about having a good finger on the finances of your business. So if you're doing the right things, if you've got the right team around you, whether it's a CPA or bookkeeper, you've got those right folks in place that can make sure that you're ready to pivot. Whether it's for funding, whether it's for a contract, having your funding in place is essential for any small business owner.
I think it probably comes down to knowing your finances too, because there can be business owners that absolutely know how to run their business. They know how to run their business and the back of the house and those types of things. So great point that you're making there.
I want to make another point to that note, Ray, as well. So when I mention having a team, that does not mean give all of the ownership of your finances to that team, that CPA or that bookkeeper. One of the things that you have to know is that when you're applying for finances, the underwriters want to know that you understand the finances of your business. So you need to have some level of understanding of what's going on. You have the team for support, but you definitely need to have an understanding. So I just want to make sure I clarify that, because sometimes folks have bookkeepers and, like you said, they're running the business, but they have no idea what's going on in the finances. And that does not bode well with underwriters.
Very true. Very true. Great stuff. All right. Let's talk about the right solution can support the DEI and ESG initiative.
Okay. So some of the things the actions that have been taken to address financial challenges over the last 12 months, like we said before, folks have been using their personal funds. We saw a lot of staff downsizing. We also saw an increase in obtaining funds through grants, crowdfunding, and donations. There were tons of incentives for COVID that were out there. And then, as you see at the bottom of the chart, the smallest amount of people actually took out debt. And then you can see the relation of the different nationalities, Black, Asian, Hispanic, and you really see how, Blacks are at the tail end of all of the different types of funding. sources or modes that are available. So this just really puts it in perspective. It lets us know that we have a lot of work to do.
Isn't it also, I mean, when you see it on the other side, because one of the things that you talked about in the third one down there is, the second one is, cutting staff, obviously is a direct result of the pandemic and other things. But then you've got to re-ramp up your business to be able to get out there. Not a lot of people out there, but the whole point is that, you've got to be in a position to be able to have that, forethought. Look, we didn't know the pandemic was coming, but by the same token, you still got to have a long-term financial plan to be able to get there, wouldn't you say?
Yeah, I would say, in fact, as it relates to funding and a plan, most lenders are asking you to have a disaster plan in place as a part of the funding or, your application. So, this is something, this has taught us, that you have to be prepared, but, having those disaster plans in place is really going to be essential going forward.
Do you feel like that's new, or do you feel like
I don't feel like it's new. So I'm in Texas, so we have a lot of hurricanes and things of that nature. So businesses here are kind of trained to have a disaster plan in place. But I think just nationally overall, this pandemic has impacted us all across the board at the same time. And I think it's put a lot more emphasis on, an underwriter understanding how did you cope with COVID? What did you do to pivot? And how will you handle if something like this happens again? So I think there's just a lot more interest in making sure that across the board, we're all looking at this and everyone is really being, prepared for the next wave of whatever may or may not happen. So
I'll tell you, I learned something today, especially when you start talking about the disaster side. So, it's interesting. And I'm sure that, that's something that people said, oh, didn't know that. So like I said, you've already dropped knowledge on me, and I'm sure the XBEs that are listening on the call. So thank you. All right, so let's talk a little bit about, really kind of the financial services that, are out there. And of course, what the Diversity Consortium, looks to be able to offer on that.
Mm-hmm. Yeah, there's a wide array of different financial services or vehicles that are out there. I've already mentioned one of them, SBA, but I'll go through the list and definitely we can talk a little bit more about each one here. But we've got microloans, conventional financing, SBA, debt equity, crowdfunding, mezzanine funding, strategic alliance funding, quick pay solutions, card services, purchase order financing, approved invoicing financing, factoring, inventory financing, grants, foundation funding. There's non-conventional sources out there, mergers and acquisitions financing, high credit risk fund. So there's a ton of different funding vehicles that are out there. And what I like to help my borrowers with is there's a lot that's out there, and we don't expect you to be a lender, right? So I don't expect someone to come to me and say, hey, I think I need mezzanine fund, or I think I need, debt equity. That's where the conversation goes into play with whomever you're working with and understanding your business. And that's why it's important to work with a great team, a team of folks who are educated in the space of funding, where they can actually provide you some real benefit. It's all about understanding your need and then applying it to the direct source of fund.
It's a great point. And, one of the things that, I look at the Diversity Consortium is, really kind of changing the game when you start to talk about it is, the plan is to bring $3 billion in funding to support the growth of XBEs. And it's not, a handout, as it were, it's a hand up.
Right.
So being able to look at it and say, okay, here's ways that we can help you to proliferate your business. And I mean, you're going to be on the forefront of that. You want to give like a little bit of a, kind of a bird's eye view of, okay, here's what you've dealt with maybe in the past and really, what you see the Diversity Consortium bringing as a differentiator out there.
Well, what I've dealt with in the past is that there's no one size fit all. So the fact that there's such a wide array of different funding partners that are going to be at the table to assist, I think is mind blowing and very much necessary. In my experience, like I said, it's been that folks really don't have an idea of what they need and they're looking for someone to provide that guidance. So I think, typically you want to go for, the best thing that's going to meet your need. But at the same time, I think as a small business owner, you have to be realistic in your expectations, right? It may be that you want a fixed interest rate, right? But perhaps you might not qualify for that. And I think that's where the Diversity Consortium is going to be able to help with that support in helping to educate the small business owners in regards to what the options are, right? And then helping to decide and come up with a game plan of what's right for my business right now. And then understanding that the loan or the funding source that I might be able to get into right now may not be the long-term solution. It may be the short-term solution to satisfy my need right now. And then with the help of the Diversity Consortium, we can transition into the necessary types of funding modes that are available.
It's a great road. I mean, look, going through funding is a journey, right? And you're having to go through that process. And one of the things that you said a little bit earlier on in the conversation was, being prepared. So, before we start to go on to the next slide, I just want to kind of, look into it, because this is a lot of services, to be able to look for.
Yeah.
So just, kind of high level, some of the things that people need to bring to the table in having those conversations so that you can best direct them on, which service to go to. Can you talk a little bit about that?
Right. Well, there's going to be an initial intake form or application that will give us an idea generally on what type of business you have, what industry you're in, how long you've been in business, because that will definitely depict what type of loan you're able to get. But from just a financial perspective and documentation needed, you always need your tax returns. Okay, so typically a lender is going to want 2 to 3 years of tax returns. And so you want to make sure you have those. And what I'd say about those tax returns is make sure you filed them, right? In my experience, I've received financial or tax returns that actually haven't been filed with the IRS. Lenders are going to double check that. Okay, so you want to make sure you've got filed tax returns that you're able to provide up front. You're also going to want to provide some current financials. So that would be your profit and loss statement. They want to see how the money is flowing through your business. How are you bringing in the money? How much are you bringing in? And then how much is going out. So that's what that P&L is going to help us with. And we're going to want to see a balance sheet. That really gives us an idea of the financial health of your business as it relates to liabilities and assets. And so we want to be able to take a look at that. If you have a business where you've got accounts receivable, they'll want to see that. And specifically with the accounts receivable, they like to see the aging report. So that's going to tell us, how the funds are coming in. Are they coming in 0 to 30 days? Are they coming in 60 to 90 days? So that's going to be some information they'll want to see. They'll also want to see accounts payable. How are you paying your bills? So that helps the lender to understand, really how you're handling the finances of your business. Then you'll also want to make sure, we've talked about credit, so making sure your credit is in alignment, but a personal financial statement needs to be completed. And a lot of lenders have a lot of different templates for a personal financial statement, but there is just a generalized way to think about it. It's giving the lender the idea of your personal financial health. So they want to see what your personal liabilities are, what your personal assets are. If you have any secondary income, they want to understand that. So they like to see how you're sitting financially personally, as well as seeing how your business is performing. I think another thing that is important that we need to understand is, do you have any other debts? And so that can be relayed on a debt schedule. And so they like to understand, you're asking for this new debt, but can you afford it? Do you have the capacity? And so all those questions, all those documents really go in alignment with what is needed for a funder. Last but not least, but definitely very important, in some cases you might need a business plan, okay, an executive summary. We need to understand what your business is about, who your customers are, and what your plan is. What are you expanding? Are you trying to take on a new contract? We'll want to understand, who's that contract with. So those are the types of question a funder is going to ask. But, through those documents, the business plan, all the tax returns, the financial statement, debt schedule, those are things that will help a lender to kind of give an analysis of what your capacities are and what type of funding you may need. So,
Very good. No, I mean, that gives exactly what we're talking about. So people can get a clear understanding of you need to be prepared. If we didn't say it before, you need to be prepared. I'm gonna say it one more time. You need to be prepared in terms of going in there. If you're gonna ask, for any of the services that you see there, you just got to make sure you bring the right things to the table. So that's great. And I'm glad that you give them an understanding of what kind of documentation they're going to need to get there. All right, so wanted to be able to get through, and we'll talk a little bit about, there's a couple of questions that we have. If we can just hold your time for a little bit longer, Tasha. If
Sure.
You don't mind. One of the questions that came in was, my business is small. I don't have a long business credit history. Will that hurt me?
So no, it won't necessarily hurt you. There's funding vehicles that can help you in a startup phase. So no activity. What we would want to understand is what you've done so far, right? And this is where, and I didn't mention it before, financial projections are important. We want to know, what are your plans for growth? If you get this loan and you're going to use it to grow your business, then what in turn are you anticipating for revenue? Right? We want to know what your projections are. So there's some other factors that we would definitely look at, from a personal credit perspective. But I definitely would say the fact, if you're a startup business or a new business, don't feel discouraged because there are funding modes out there for you.
Very good. Another question. They said, can I do a loan to grow my business for the personnel side? And I think what they mean in this one is, to be able to get more staff.
More staff. Yeah. So we generally consider staffing growth or funds needed for that working capital. So yes, there are definitely working capital loans that are out there that would be able to help you with staffing, with inventory, with equipment. I mean, there's a ton of uses, right, for a business to use funds, and working capital can cover a vast a majority of those uses, marketing, that sort of thing. What I would suggest is that if you're in need of funding, the key thing is identify exactly what you need it for and how much. One thing, or one of the pet peeves for lenders, is for you to go to them and say, I need money, and not know how much money you need and not be able to articulate what exactly it's for. So have a detailed list of the funds that you need, why you think you need it, and how you think it's going to help grow your business.
That's a great point. I mean, I can also think that there's the struggle of somebody asking for way too much based on credit history and those types of things. You want to talk about?
And it's another thing along those lines, not asking for enough, right? So one of the things as a lender I look at is I don't want to undercapitalize you. So if you're not asking for enough to really be successful, we're going to talk about your plan. Because if we give you money and it's not enough to get you across the finish line, then you're right back at square one without the funds to continue in your business. So it's kind of a double-edged sword. We want to make sure we fund you enough, but not too much, So, but that's where that analysis comes in, and the lender needs to have a full understanding of your business and your future plans.
Very good. We have one last question, and I think I know the answer to this one, but I'm going to ask it to you anyway. Is a business plan a requirement? It's a lot of work.
Yeah, so this is what I would say. The day is over for those long, drawn-out business plans. Okay, you don't necessarily have to have, a 30-page plan. You can have a small plan or an executive summary, right? Typically, a business plan is only required when you're a startup business. That's when there's nothing else for us to review other than that business plan. Any other type of funding, an executive summary will do. And in some cases, a lender can look at your website or just get a brief summary overview of what your business is. So, a business plan, rule of thumb, is only needed when you're doing a startup or you're doing an expansion, right? And you need to really detail your marketing plan and your capacity. So who's on your management team, but don't worry about that. There's, you can get by with a streamlined overview of your business. Hope that helps.
No, it does. And I'll give the follow-up question to that because of what you had said before. What do you as a lender consider the length of time where you're still considered a startup? Is there,
Yeah, there's definitely. So anything under 2 years is considered a startup. Yeah.
Good. No, I mean, I think that's, you need to know that. People need to know So that's great. No, Tasha, the information that you're giving today has been great. To be able to give really kind of a, snapshot of what the market looks like, and then really being able to say, okay, here's what it could look like in the future. But if you're prepared, you'll put yourself in the best situation to be able to, as we always say, proliferate your business and bring it to the next level. So Tasha, thank you for your time in terms of working. She did a great job. Let me kind of talk about a couple of things as we start to head out the door. So we do these on a monthly basis, and this is what we call a micro. And Tasha will be intimately involved with this to be able to go as we go through and just providing insight in terms of the financial markets. We do this on a monthly basis. Please go to our website, thediversityconsortium.com, to be able to find out when those are scheduled, and spread the word. Talk other people that may need to have access to this knowledge to be able to do that. One of the other things that we also do is we do what we call the Thrive series, and that really kind of goes into the overall topics that's not kind of the consistent part of the month. Our Thrive topics are very specifically geared towards the XBEs. We had one a little bit earlier today talking about some of the 10 biggest challenges. The next one will be on November 23rd, and we will be sending everybody that's on this call, we'll be sending notifications of that. Please register early so that we can see how many people we're going to have in there, so that we can accommodate and make sure that we bring as many subject matter experts to the table to be able to give you knowledge and really be able to educate you on what we see working with both XBEs and the corporate side. So we truly appreciate your time as you've spent it with us today. If you need to contact us, please feel free to reach out to the information that you see on the screen. My name is Raymond Tate. I'm the Vice President of Sales for the Diversity Consortium. You see my email address down on the bottom, and also my telephone number. Just please don't call too late. There's just problems, but it should be okay. So we appreciate your time. Tasha, thank you for sharing time with us as we went through. You actually knocked it out of the park. As I say, you kept your rock star status. And to everybody else that attended on the line, we appreciate your time, and we'll see you next time.